a trend. The same thing happened in a lot of other sectors also. Like, so the real estate sector per se, and we'll talk about real estate sector extensively per se. But if you frankly look at the market, what do we have there? This has been the best trading day so far. Not too many days have passed in 2024 yet, but yes, Thursday was a good day. No intraday decline, closed at the highest point of the day, fresh long positions, Nifty call has added open interest. So how should you read into this? And what really was the big factor which was at play? Well, I would say it was largely a combination of fresh buying and also strength coming back or belief coming back in the market when you got numbers from a Bajaj Finance or from an IndusInd Bank, largely financials, that the earnings season in terms of a demand setup scenario will not be that bad. The bank Nifty, courtesy what happened to banks and post quarterly update, has inched higher and is now above the resistance point. So I still would maintain that the real litmus test for me would be not the quarterly update but the earnings season per se. While it's good to see that markets in a sense at lower levels are finding support, and the strategy continues to be that if you are staying in the market, it is helping, it has been a rewarding experience. But I think January is still 3 weeks. Rather than allocating fresh capital, the choice is either you book some profits or you stay with the trend. And that's a judgment call right now what the best it is. I think it was a good Thursday. We built it on nicely, and this morning we are likely to build it up. And between the Bank Nifty and the Nifty, I think the Bank Nifty is looking much better.
Okay, yes, indeed. That's the trade setup across the globe. By the way, you do have the tech-heavy Nasdaq that continued to fall by about 0.5%. So 5 straight days of declines there. The S&P 500 pretty flat. The Dow Jones managing to eke out again, but not quite convincing. So 4-day losing streak on the S&P 500. Lots of economic data expected for the Asian markets, but by and large, they're mostly higher this morning. Well, you were touching upon Q3 updates, and yes, it has been pretty healthy for the likes of an L&T Finance, and we've been marking what we've been seeing with the Q3 updates as well across the board. Utkarsh Small Finance Bank, for instance, Sobha, the reason why the stock cheered yesterday. J&K Bank, Dabur has been in line. And just, Nikunj, if we were to nitpick at the likes of a Dabur and some of these companies, they are talking about how rural growth is still lagging urban, but there is early signs of a revival in consumption.
See, how do you judge the mood of the earnings season? Well, you judge the mood of the earnings season by first taking a cue from financials. Because if financials are growing, credit offtake is strong, that means credit is getting created, and that means demand numbers would be decent. Then you look at the consumer company, and then you look at auto numbers. These are the 3 indicators which in a sense would tell you which way the basic mood point is. So the numbers from banks so far, what we've got across the board, I think they've been very strong. Then auto dispatch numbers, barring tractors, they've had a decent December despite the base effect kicking in. And third, if I look at a company like Dabur, early days, but they're talking about things coming back and normalizing, at least on the margin front, and the rural economy seems to be bottoming out. So the early indications, and these are forward commentaries which we are getting from corporates, they are pointing to perhaps demand not getting punctured, which in a sense was the concern that, okay, will demand crawl back down? Post Diwali, will the consumer be absent? Will the consumer demand post the Reserve Bank of India decision, will that really, not come out? I think all those concerns, I think some of them are getting arrested. And that is the reason why you've seen a decent Wednesday followed by a good Thursday. I again would say that wait for the earnings season, because the earnings season in a sense would be the differentiating factor in terms of what the market expectations are. The test for this market, I think, would be how flows stack up by FIs and what happens to market reaction post the earnings season. Will the optimism in the market get challenged and checked because of that, or will markets continue to muster along? I think it's very easy to get carried away right now, but my advice is don't put fresh capital to work and keep your expectations low. Just keep expectations low. A lot of folks have started believing that what we saw in the last quarter, last 3 months, the next 3 months would be a repeat of that. Keep your expectations down. That's not going to happen. That's a very simple way of approaching this market.